Hey everyone, welcome back to Corporate Decoder, the place where we bring the dry world of corporate filings to life. And today we're diving into Agilent Technologies' latest report. And let me tell you, they've got some interesting numbers to share that might just tell us what's really cooking behind the scenes. So what's the big deal with this filing? Well, Agilent Technologies is a company that makes instruments and software for scientists and researchers. So they're kind of like the tool makers for the science world, this particular report. And 8K is usually for big news, and in this case it's all about their financial results for the third fiscal quarter ending in July of 2025. Think of it as a quarterly checkup on how the company is performing. Now, Agilent is doing something a little different here. They're not just giving us the standard accounting numbers. They're also talking about what they call non-GAAP financial information. What does that even mean? Well, it's like looking at your bank account after taking out all the special one-time expenses or income. Companies do this to show you what they consider their normal business performance. Strict of things like restructuring costs or the amortization of intangible assets, which are basically accounting ways of spreading out the cost of things like patents or brand names over time. They believe this gives you a better picture of their ongoing operations. Seeing things through the eyes of management, as they put it, is meant to be a more transparent look at their core business, comparing it to their past performance and even to competitors, and can to be a more transparent look at their core business, comparing it to their past performance and even to competitors. They're saying their investors find this helpful to understand the real underlying health of the business, not just the numbers that can be heavily influenced by accounting rules. They want to show you the engine running smoothly, even if there's some temporary maintenance happening on the outside. But it's super important to remember this isn't the official accounting picture. This non-GAAP stuff is their interpretation, and it might not be calculated the same way by other companies. What they're saying here is that while GAAP is generally accepted accounting principles gives you the full by-the-book financial statement, their non-GAAP numbers are like a special highlight reel designed to show you the consistent performance they're aiming for. It's a way for them to communicate to the market that even if some unusual costs show up in the standard GMUNIP numbers, the core business is still strong and on track. These are the kinds of things they take out. Restructuring costs can come from things like reorganizing departments, closing facilities, or severance packages when people leave. Amortization is similar to depreciation but for intangible assets, like the value of a strong brand name or a protected patent. While these are real costs, management might not see them as reflective of the day-to-day operating success of their core products and services. They still watch these items internally to make sure everything is on track. But for reporting purposes, they want to highlight the picture without these adjustments. So for the really nitty-gritty details on how they're adjusting their numbers, you'd need to look at that Exhibit 99.1, which is their press release with all the financial results. Unfortunately, we don't have that specific document here to break down every single number, but we can understand the why behind it. They're trying to give you a clearer view of their operational engine by removing the noise of these specific accounting treatments. This exhibit is essentially the detailed announcement of their quarterly performance. It's where you typically find the revenue numbers, profit margins, earnings per share, and all those key metrics. Since they've chosen to file this as part of their 8K, it signals that these results are important enough to warrant immediate public disclosure and that they're making these specific financial details readily accessible in conjunction with this official filing. It's their way of being upfront with investors about their financial health at the end of their third quarter. Now let's talk about what this means for the actual company and its stock. Agilent stock, traded under the symbol A on the New York Stock Exchange, represents ownership in the company. This report, by detailing their financial performance, directly impacts how investors perceive the value of owning a piece of Agilent. Good financial results generally lead to a higher stock price, while poor results can cause it to fall. The par value of the common stock is a very small nominal amount, mainly an accounting or legal concept, and doesn't reflect the actual market value of the shares. Being listed on the New York Stock Exchange, or NYSE, means Agilent has to follow some of the strictest rules for public companies. It's a major global exchange, and companies that trade there are generally those with significant size and a track record of meeting rigorous reporting and governance standards. So for Agilent to be a player on the NYS, they need to be pretty solid financially and transparent in their dealings. This report is part of that ongoing commitment to transparency for the investors who trade those shares on the NYSE. This number, 7705187772, is their employer identification number, or EIN, with the IRS. It's basically their social security number for businesses. It's used for tax purposes and for most official dealings with the government. While it's a crucial identifier, it doesn't really tell us anything about their financial performance or their business strategy. It's more of a bureaucratic detail confirming they are a registered entity in the US tax system. And finally, let's look at the signature. This is P. Diana Cho, and her title is Vice President, Assistant General Counsel, and Assistant Secretary. This is the person who officially signs off on this report, confirming that Agilent Technologies Inc. is submitting this information according to the rules. It's a formal stamp of approval from the company's leadership, indicating they stand behind the contents of this filing. When you see a signature like this, it means the company is taking responsibility for the information being shared with investors and the market. So, what's my take on this? Agilent is using this filing to give investors a clearer picture of their core business performance by highlighting non-GAAP metrics. This can be a good strategy to cut through accounting complexities and show the underlying strength of their operations. However, it's always crucial to look at the GAAP numbers too, because those restructuring and amortization costs, while maybe not reflecting day-to-day business, are still real expenses that impact the company's bottom line. The fact that they're on the MC and providing these detailed quarterly updates shows they are committed to transparency, but without the actual numbers from Exhibit 99.1, it's hard to say if their operational engine is truly firing on all cylinders or just projecting that image really well. The key takeaway is that companies like Agilent are constantly managing perceptions as well as performance, and these adjusted numbers are a big part of that management. Alright, that's our breakdown of Agilent Technologies' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description, joining our community to discuss these reports and more. Thanks for watching. See you next time.